Now that we've talked about the percent B and the bandwidth, let's talk about how we pull it together and start to lay the foundation for a trading system. So, do you remember the main plays, the first ideas of what we use whenever we're talking about the Bollinger Bands, the squeeze, the trend trade, and of course the reversals? Well, what we want to do is we want to start looking at how these indicators can impact each of those plays. These indicators add signals to the main plays. So let's look at first the squeeze play, then we'll look at the trend trade and the reversal play here. With the squeeze, what the bandwidth does is it tells us when the squeeze is coming. And so this is one of the keys, is you're going to use the bandwidth to tell us when the squeeze is coming. Of course, you can see the squeeze coming, but the bandwidth is a way that you could scan for it, or if you want to just quickly look at it, relatively speaking, and say, okay, high or low, bandwidth is really low, so I know that there's definitely a squeeze that's coming here. It also shows us the squeeze is breaking out. As the squeeze starts to break, you're going to see the bandwidth start to turn up and show that expansion there, so that will also be an indication that you can get here with the bandwidth. And again, as I've mentioned a couple of times, bandwidth is a great criteria to scan for to go find some of these squeeze plays that might be out there. Let's take a look over here and notice we're using all three of them here. And by all three, I mean the percent B across the bottom, the bandwidth, and then of course the Bollingers on top. Notice we've got a great squeeze that happened here on Alaska Airlines. You see we were very low and it starts to take off here. Also notice what's happening. We're way outside the band and we're very overbought. This is very typical. Whenever you're looking at a squeeze breakout, usually the first signal you're going to get is a bit of an overbought or an oversold signal on the percent B, because very often when that squeeze is breaking, you're going to be outside of the band, at least for a couple of trading sessions there. And so that's exactly what happened here. We get to moving here, then watch as the bandwidth starts to turn down. This squeeze has run its course here, and this particular move is done. You're also noticing there's a strong divergence that's happening across that move. So pretty much from the time the squeeze starts to the time it ends, you're going to start to see that divergence, and you're going to recognize that's happening there. So you're looking for the exit signal. The divergence itself is not an exit. It's just showing you that that momentum is starting to slow down. That first surge of energy came from that breakout of the squeeze itself, of course. If you look further over here, maybe into the beginning of January, you're going to notice another squeeze that happened. Look, there was the low tick in the bandwidth, and then it started moving up from there. And as it starts moving up, you start to see that breakout starting to happen. The trend was very slow getting going, and then finally it surged out here. And once again, the bandwidth peaked, and it started to tick down. But if you look over to the far right, now what's happening? We're getting back into another squeeze type of a scenario. So more often than not, when you see the squeeze, it is an indication that something's about to happen. And what's great about the bandwidth is visually you can see very quickly, yep, that squeeze is getting into place. I often get emails, I get screenshots from people, they say, is this a Bollinger squeeze? And there's some question about it. The bandwidth indicator is really the best way to see that, again, because of the relative nature that you've got. Sometimes, you have a squeeze, and for some stocks it's a really, really tight squeeze, and for some it's kind of, it's a tight, but it's not that tight. Well, you may wonder, but if you look at the bandwidth indicator, you can look across the board here. Look again, and you see, yeah, I'm down here, I got a squeeze. I'm down here, I got a squeeze. I'm down here. And so you get a good relative idea. Maybe on, for example, Alaska Airlines, the squeeze is coming in at 4. That's the reading that we're getting here, 4.1. Maybe for another stock, the squeeze starts to show up around 6. Maybe for another stock, the squeeze starts to show up around 3. So you can look relatively from stock to stock, and you can say, okay, where does this stock typically start to set up that squeeze? And you can start to set some perimeters on that. Of course, the percent B is just giving you some additional information as you see across the bottom. So let's take a look over here at First Solar. Let's start by looking at the far left side of the chart. And you see this squeeze, and look at your bandwidth indication. Look how low it is. It's actually right around 5 on the bandwidth scale here. And of course, that got into a really nice move. It was about a $20 move as the First Solar trade broke to the downside. And look at what happened to your bandwidth. It moves really, really high. Relatively speaking, it's very high. And then, of course, it starts to tick down, and that move is done. Now, let's compare that to, say, the middle of the chart here. In the middle of the chart, you do have a tighter band. It's a much more contracted picture. But if you look at your bandwidth, you realize this is reading up here around 7 or 8, so it's not nearly as contracted as the one that really broke out nicely back in September. And so you can see that picture here, and you see that in the bandwidth. You don't see that on the bands themselves. With the bands themselves, they both look like contractions. They both look like squeezes, but in the bandwidth, you can see the extent to how tight it really has squeezed down. Now, if you come on over to the right side of the picture here, you're going to see a really tight squeeze. This one's actually even lower than the September squeeze, and it took a little bit of time, but it did start the breakout, and then once it started to break out, looky there, there's your head fake, and of course this trade has moved to the opposite side, and it started a bearish trend, even though it started with a bullish breakout. That's that part of that fake out trade that we've talked about a couple of times. But the bandwidth is a very good indicator to help you understand better and to see visually better where the spacing is for those squeeze plays, and of course that's the beginning of the big break. Let's do one more example in here, and this one's of the Aussie dollar against the US dollar. Notice as this trade's coming out of a large expansion, we got a pretty good sized move here with our bands, and then we get the contraction here, and look at your low bandwidth that comes in. Now this low bandwidth, if you look to the far left, you can see it's not quite as low as the previous one, but it is still pretty low, and look at how it plays out differently. Yes, this was a squeeze that turned into in this case, a trend trade. Look at what happened though. It broke bearish, and then it starts trading the trend trade, walking the band down through here, cycling between the middle and the lower band. Now compare that with the one that we had before. You'll often see this, by the way. The one we had before, back in September, we had a very, very tight squeeze, and when it broke out, it was more like a surge of energy. This one that we had here between November and December was a little bit more orderly, and oftentimes when you see a squeeze but it's not as tight, the move that follows is a little bit more of an orderly move. When you see a really, really tight squeeze, with very rare exception, that breakout is usually a much bigger burst of energy. That's why you kind of want to figure out what kind of a squeeze you're dealing with here. Take a look at the next one that we had here. Is a really tight squeeze. Again, it was kind of similar to the November one, but it broke out more similar to the September one. Very fast surge of energy, and it stopped very quickly here. And you can see the bandwidth, it surged and then it ticked down. And then of course the trade got to moving very sideways during the next phase here. Now what's also interesting, sometimes these trades don't always play out the way you're thinking they will. Here's a squeeze that did not play out. Very low bandwidth. It played out bearish initially. I've used this one as part of our head fake example. We got the bullish morning star reversal candlestick formation, and immediately our target's the top of the band, and you see it right there. That's what happened. Traded back to the top of the band. Bandwidth started to expand, but it kind of stabilized in here, and you really ended up with more of a foundation than we did an actual big surge of energy. Still, it was an interesting trade, and still we could make money with this trade, a few hundred pips actually on this trade, but it didn't have the same kind of surge of energy as maybe you would be hoping for from a squeeze. It's another thing to really bring back to your attention. Whenever we see squeeze plays, the excitement is always that, hey, this is going to be a windfall profit. I'm going to see a big, huge surge of volatility. And oftentimes, there's still money there, but you've got to really learn to play it because of that head fake. The head fake happens more often than you want to admit. And so what happens is you have the squeeze, it breaks out, and then it head fakes. If you take that counter trade really quick, you can oftentimes make a really good chunk of money. It's not the chunk you were expecting to make, but it's still a really good chunk. And this is a great example of where we still could have made money on that trade if you'd recognize the head fake that was happening to us.